Did the California housing market get more challenging? We're going to find out in today's video. What is going on, everybody? Welcome back to the channel all about real estate. My name is Lewis, and in today's video, we're going to do a deep dive into the real estate market here in California. Let's jump right into it. All right, so up on the screen, I have a slide from the California Association of Realtors, and it is showing a snapshot of the California housing market for December of 2021. So let's go ahead and jump right into the details here. So we had about 430,000 units sold. That is about a 16% decrease year to year. In other words, from December to December. However, existing home sales as a whole for the entire calendar year is up about 7.9%. Median home price is up 11% at just under 800,000, and we have 1.2 months worth of inventory, which is actually down year to year about 14.3%. Median days on the market here is 12. That is actually increased slightly. We are up about 9.1% on a year-to-year basis. Sales are up for the year despite the slowdown in the second half of 2021. So we can see here that a year ago, the actual sales activity number of units was up, and then we sort of trickled down a little bit coming into the second half of 2021, and then we evened out a bit. So the second half was a little bit slower, but overall on a year-over-year comparison, we're up about 7.9% as far as sales activity and units go. And this chart actually dates back to 2005. So you can see sales activity for about the last 16 years. And it's really interesting to look at. When I look at this chart, it has the number of units sold here, and then it has the date and the year associated with those sales. So you can see the peak sales activity in '05, and then we started to see the slowdown here in California all the way into about 2007, and then we started more sales taking place starting in 2008. That was obviously during the great financial crisis, so we had that dip in sales once credit markets kind of froze up a little bit there. But what's really interesting to me is that you can see the actual trend of sales. If you were to just draw a line right at about 400 to 425,000 units and just drew it straight across, it actually shows that sales activity, the actual amount of transactions being conducted, stays relatively similar year over year, despite what's going on in the economy. You can see a small blip here in May of 2020, and that was right around the time we were dealing with all of the lockdowns due to the pandemic. So really interesting. Okay, so this next slide is sales by region, which is really interesting to me. This actually shows where all of the sales are actually being conducted. So 49% of sales took place in Southern California, 17% of sales took place in the Bay Area, 22% in the Central Valley. I believe the Sacramento market would fall into the Central Valley here. We have other counties taking up about 6%. 2% taking up the far north, and then the Central Coast is about 4% of all sales. Now, over here on the right-hand side, it says December 2021 home sales growth by region. It actually shows that on a year-to-year comparison, so December to December, the actual sales activity were actually down. You could see the San Francisco Bay Area was down about 23%, Central Coast about 19%, far north 17%. Various other counties 16%, and we had Central Valley down about 10.5%, and Southern California number of sales was down about 10.7%. The next slide shows that the upper price segments of the real estate market moderated at year end. So this is a really interesting chart to me. So on the right hand side of this chart, we have the December 2021 year over year percentage change, and you can see that anything from 0 to 300,000, the sales numbers were down about 52%. Now, keep in mind, this is comparing December of 2020 to December of 2021. The number of sales between 300 and 400,000 were down about 34%. From 400 to 500,000, we're down about 18%. 500,000 to 750,000, down 11%. And then 750,000 to $1 million is actually up about 2%, while $1 million to $2 million is down 2%. And then the $2 million price point and higher, the number of sales that occurred actually is up about 22%. And then on the right-hand side, we see the share by price segment. The light blue here indicates December of 2020. The share of homes sold between 0 to 500,000 was about 37%. In 2021, that is down to 28%. The share of homes sold between 500,000 and $1 million in 2020, that was 42% of the market, whereas in 2021, that is 45% of the market. A million plus in 2020, that made up about 22% of the market. In 2021, that made up 26%. So in plain English, prices are increasing. All right, the next slide here is the California median home price. The median home price is down slightly. It fell below 800,000. However, it is still hovering near record highs. This chart goes back to January of 2005, where the median home price was hovering right around 550,000 or so. We saw it peak out in, looks like 2007 at about 600,000. Then we went into the great financial crisis. It started to come down. We had a bottom here in the market somewhere around 2009 at about 300,000 being the median home price. We've been in a bull market pretty much ever since, where we've seen price appreciation almost year over year, leading all the way up to 2021. So we are still hovering at or near record highs, even though we are down slightly from mid 2021. So this is pretty interesting data. It looks like we might have reached a peak here. I'm wondering if it is just a seasonal adjustment where prices have started to come back down a little bit as we went into the winter months, but only time will tell. Next up is price per square foot. This is actually one of my favorite metrics to track here. And we are hovering at about $382 price per square foot on average. The month to month, in other words, November to December, that's actually a decrease of about 2.8%. So we're down slightly from November of 2021. However, on a year-to-year comparison, so December 2020 to December of 2021, we are actually up 15.8%. So we've started to see prices soften just a tad here, but overall, if you look at this chart, you can see that we've basically had price per square foot increases pretty steadily here for the last 10 years or so. So the reason I like the price per square foot metric is because I like to compare existing construction to new construction. We've obviously seen the cost of materials and labor increase dramatically here over the last several months due to inflation. So the cost per square foot to build on new construction has gone up dramatically. So I'm not surprised to see the higher price per square foot on existing, but I think it is a good gauge of value. In other words, if you can build new construction for somewhere around $300 a square foot, but you can purchase an existing home for, let's say, $280 a square foot, you know that it would cost you more to replace that property if you were to build it. That indicates a good value. So the next slide here is the homes sold above the asking price. And what's interesting is it breaks down this sales data by county. So you have all of the counties listed here at the bottom, and then it shows the percentage of homes sold above the ask price in December of 2021. Here's the 50% mark here. Anything above this yellow line is an indication that 50% of these homes actually sold above the list price, while everything below this, all these counties here, sold below the list price. So you can see a couple of the areas that I like to pay close attention to because they are in my market. You have Placer County here. That's right about 50% of homes selling above the ask price. The Sacramento County, we have about 58-60% of homes are selling above ask. And then at the top of the charts here, we have some of the Bay Area counties. So Alameda, Santa Clara, San Francisco, Contra Costa, etc., etc. So really interesting. It is still a very hot market. Many homes are selling above the list price. Okay, and this next slide I thought was really interesting, so I wanted to include it in this report, but it says the mortgage payment is up double digits as price and rate both increase from the prior year. So it says that the actual mortgage payments here, that would be this gray line, it's actually up about 17.2%, and price growth is up about 11%. So these are some headwinds here in the real estate market. We've obviously seen the 30-year fixed interest rates increase, and they're up about 0.5%, right around 3.5 to 3.625, depending on how you qualify and the fee structure of your loan. And as you can see here, you can see that price growth, even though it is about 11%, it has actually slowed down from the prior months, while the mortgage payments have actually gone up. So if mortgage rates continue to rise, I would imagine that we would see slower and slower price growth as it puts downward pressure on real estate prices. And then the last slide that I think is really important to review review is the inventory levels here in California. It says here that inventory has dipped to the lowest level in recorded history. December of 2020, we had 1.4 months worth of inventory, which is still incredibly low. But in December of 2021, we had 1.2 months worth of inventory. And just to provide a little context there, generally speaking, anything less than 3 months worth of inventory is considered a seller's market. Anything 3 to 6 months is neutral, and anything 6 months or higher is what we would consider a buyer's market. All right, so that is going to do it for today's video. If you found any value in this content, please consider smashing that like button, tapping the subscribe button. It really helps grow and promote the channel. Thank you so much for taking the time to watch. Take care.